FPC's remit is to ensure Britain's financial stability. Are they going to do that today?
Well, we hope so, but we have to remember macroprudential toolkit is a fairly blunt instrument. We would not be surprised to see them put some limits in terms of mortgage lending, probably over $500,000 in terms of salary multiples. We're also interested as to whether they're going to adjust their Help to Buy scheme. Remember, the government will guarantee any loan over £600,000. They could probably halve that, but since the average loan on Help to Buy is about $163,000, we're not entirely convinced it's going to do very much.
The ground had been quite well prepared in the Mansion House speeches. Is there going to be any impact on the market from this, do you think?
Well, I think if we start to see the macro toolkit unveiled, then perhaps we start to look towards the slightly more dovish Carney that we heard from this week, rather than the more hawkish Carney that we had at the Mansion House. The mantra from MPC members consistently now seems to be, we'll take the data as it comes and we're in data watching mode. But if they start to use a macroprudential toolkit to slightly cool down the housing market, then perhaps there's less to do in terms of raising interest rates.
On the back of that committee hearing at the beginning of the week, or a couple of days ago, we've got today, of course, as well. Are you less impressed or more impressed than last time around?
Less impressed. I mean, I think this is, if we get the macro pru kit used, this is now the third pivot that we've probably had from Governor Carney in basically around a month. So quite frankly, we think it's not entirely clear that the Bank of England has a strategy. Clearly, forward guidance is no more. So I think if they're data watching, so are we. Actually makes my job slightly more interesting, and indeed yours. But they don't seem to know where we're going. It's a bit like watching England bowlers at the moment in cricket.
Couldn't have said it better myself. Tom, we had the weak US number yesterday. Does that number matter in the scheme of things? And we've got the non-farm payrolls, of course, next week, which is the big one.
Indeed. I don't think it matters. I suspect, the knee-jerk reaction, of course, the number was weaker. In fact, consumption always looked out of whack with much weaker, investment and government consumption data. We're all looking at Q2. Knee-jerk reaction is if Q1's so bad, Q2 will be better. Non-farm payrolls on Thursday, of course, because of Independence Day. We're still looking for a fairly strong number. Today, the PCE core deflator could be around 1.6. We suspect we could see 2% by the end of the year, which is a year ahead of the Fed, and calls into question why they still want to remain on hold until the middle of next year.